Hello, Oracles! Oracle Tim here from Oracle Investments. Well, it's nice to see some green today. Finally, that green goes well with the red to make our Christmas colors. So finally good to see that. Don't know how long-lived it's going to be. It's nice to see it. I'm going to get into some of that in a minute. Still have a week and a half left of the year, so it could be a little bit of volatility. Not sure. But I have seen quite a few of our downtrending stocks starting to break those downtrends. That is an excellent sign. Even if it doesn't mean we're going to have a massive V-shaped turnaround, it's just nice to see that some of the bleeding is stopped and we can start moving forward and kind of get back into an upward trend again. And this all led me to something that I wanted to discuss with you guys today, which is, I've discussed with many of you because I've gone through it myself, is market's going red, our favorite stocks are going red, you get into panic mode, you're seeing your portfolio go down, you get your emotions tied up, and especially as a little guy, you see that and it's really painful. Obviously when you have even more money in your portfolio, it's a larger chunk coming down, but I know what it's like being that little guy because that little guy doesn't have that extra cash to, be able to take advantage of these situations. So I taught myself to be able to do that. And I also taught myself that look back at history, take the step back and see, how many times has the market gone down and come back? It comes back every single time. Even through the depression or the recession that we had in 2008, sure, maybe it took a while to actually come back to where it was before, but it still came back. So, what are you going to do about that when we get to that situation again? And this is what we talked about before, about planning ahead to be able to take advantage of these opportunities. So whether it's a short-term, 2-week, 1-month red phase, or whether it's a 2-year recession, regardless of what it is, what can you do to prepare and plan for that moment where you don't have to worry about, oh my God, my portfolio is going red, the dip just keeps on dipping, I'm out of cash, what do I do? What can you do to plan ahead for that? Well, the difference between wise investors who increase their wealth during times like this and inexperienced investors who will lose money in times like this is the wise investors have that source of income that they can use to invest in times like this. The inexperienced investor doesn't have that and they panic and then they sell. Don't forget, you don't actually lose any money until you make a sale. So if you don't have any money to invest further into it, just diamond hand through it. As long as the stocks you have are strong fundamentally and you have high conviction in them, just hold on to it. Just hold on and ride it out. And if it's really hard for you to watch, just don't watch. Just stop paying attention to the market and let it go. I mean, it reminds me a lot of times of the stories I hear about people who maybe they bought Bitcoin or Tesla back, 5-10 years ago and totally forgot that they had it. And then they looked and like, oh my gosh, I forgot I had that. Look at how much money I made. Yeah, well, if they were paying attention to how those two traded over the last 10 years, they probably would have sold out a long time ago. But they didn't, they forgot about it. And that was the most important thing because they held on for a long time. So the first thing you can do if you do not have outside income coming in to take advantage of these dips is look at your stocks that you have without an emotional lens and say, are these stocks strong fundamentally? If they are, don't even worry about it. Let them go and hold on through this. And if you do happen to have cash coming in that you can invest into these stocks, add more. It's simple. You're going to lower your dollar cost average, or if you're in super low, you'll just add more at a lower cost than it was, and you're fine. And you're going to add more, and that will in turn compound and become a better return on your investment later. And one of the great ways to be able to have some cash flow income coming in is through dividends. Now, dividends are not going to be something that you're going to go and buy a stock just for the dividends. Usually it doesn't pay off enough for that. So there is a strict purpose behind having a dividend stock, and that would be for cash flow. And now there are some good growth stocks that do pay dividends, like an Apple, but if you're looking for something strictly as a cash play, a cash flow option, for me, I put it into my IRA. My IRA is strictly dedicated to dividend ETFs or stocks. And I've had them in quite a few ETFs, and I got some tips from Rocky, and thank you so much for this, because he showed me a few that are out there, and I'm going to go over a few. I actually invested in them today. I sold out of a couple of my other ones to put them into these because they are stellar, and I highly recommend them. The first one is Divo, D-I-V-O. Trades at about $37.50 at the moment. And so this one here, it's got United Health in it, it's got Microsoft, it's got Apple, it's got Home Depot, some really good solid stocks that are in this fund. And again, as we talked before, for those of you who are maybe in other countries and you don't have access to fractional shares and fractional trading, ETFs like this could be an amazing way to get in, because you'll be able to buy pieces of the company that you want, and you're going to get the dividends as a little bit of a bonus. Now, the downside to a lot of these ETFs is they're not going to go up in value. Their trading range is what it is. So Divo is going to trade around $37 forever. And all the ones I'm going to go over are going to be about the same. So you're strictly getting into them because they are going to be a solid ETF with solid companies that are involved in them, and you're doing it strictly for a cash flow play. Another one that he recommended was RYLD. That one trades around $42. It's basically like the Vanguard Russell ETF in this one here. It pays 25 cents per share on monthly dividends. So a lot of dividends that you'll see out there, like the Apples and Microsofts, they pay quarterly dividends. Paying monthly dividends is really nice because you're turning over that money faster, adding more in faster, and as that snowballs up, it gets even better. One of my subscribers on here, Q, is actually going to be sending me an app that he is working on. So I'm going to be able to test that out. And what it is it's like a spreadsheet calendar where you can put your dividend stocks into it and track to see how that snowball is going to grow for you. So between what Rocky has given me and Q is going to give me, I'll put that together and show you guys what it looks like. So, and again, when it comes to your actual portfolio, maybe better with stocks, but if you've got like a retirement fund or you've got an IRA that you're investing in, this is going to be a great way to try that. Another one he mentioned is GOF, it's Guggenheim. I don't know what companies are in this. I was trying to look at it and it didn't show where I normally get to see all the companies. But this one here, trading at $18, gives you 18 cents monthly per share that you've got. I mean, that's a pretty darn good trade-off on that. So again, another great one to get into. I don't know what stocks are in it, so I'm not sure about that one totally yet. But by far, my absolute favorite one that he had mentioned, QYLD, trades at around $22.37 right now. He told me, and I looked at the chart, sticks around the $23 mark, probably never gonna really go up or down much from there. But dude, the stocks in this one, it's got all of the FANG stocks. It's got Tesla. It's got Nvidia, it's got Microsoft. Talk about the best of the best in this. And this thing is paying 22 cents per share on a monthly basis. Outstanding. So I ended up I had some Vanguard VYM. So I sold that and I ended up buying QYLD and it doubled. So in where I buy them, you can check your dividend income estimator. It doubled mine on a monthly basis. Ridiculous. So highly, highly recommend QYLD. Again, these are for cash flows. So when we're going back to talking about, getting yourself into a position where, hey, we're going into a red time, where do I have cash flow coming in to be able to invest in these stocks? Well, if you've got dividends that are paying you on a monthly basis, you now have cash flow coming in to be able to take advantage of these red times. And again, in the beginning with these, it may not be a lot of money. So you're going to have to build it up over time. And again, as I said, with this calendar that I'll be working on, you'll be able to see that snowball. So you'll be able to see the future and say, all right, I know it's coming. And it'll, encourage you to invest more into that to be able to be ready for these red moments. and then you could take advantage of it and you could take yourself out. And instead of being in panic mode because we're going in the red, you can be like, yes, I have the money to be able to take advantage of this opportunity and be so excited for it rather than fearful. And now, speaking of red and taking advantage of it, who out there has been taking advantage of Tesla stock in the red? I know so many of you have. It's been awesome to see all of these comments coming through with you guys buying under $900. Awesome job. Sounds like, if you guys haven't seen it, Dave Lee, I actually put it in the description down below, did a whole video breaking down why Elon is done selling for the year. He did a full breakdown. I'll recap it quickly right now. Looks like for federal tax purposes, Elon has paid or will be paying $10.8 billion in taxes. Elon tweeted that he is going to be paying over $11 billion. Well, that leads a lot of us to believe he still has more selling to do. But wait, he also took a look and said that based on his California state tax, he's going to be paying $300 million more there. So that puts him at $11.1 billion in taxes paid. So that is the over $11 billion, and that means that he is done selling for the year. So that means, and that I think might be a reason why when the whole market rebounded today, Tesla really rebounded, because I think this math has finally hit the airwaves and people are now realizing, ooh, Elon's probably done. Now, Dave Lee does predict that Elon's going to finish these last 3 sales probably around February, March. Makes sense because the stock is going to most likely run up into Q4 earnings in the roadmap. So the stock will be probably between $1,200 and $1,500. That's my thoughts and guesses. But I'm guessing it'll be there so that Elon can sell out there, which will in turn, as many of you have commented, Elon thinks the price is too high. Elon's using this to keep the price down. Kind of makes total sense if he plans on doing it at that time frame, because he anticipates the stock is going to be too high. And because it's going to be too high, how can he bring it down? Well, he can sell 3 million shares. So makes sense that this could be playing out this way. We'll obviously know for sure in the next week and a half, but Dave Lee made a very compelling argument for that, so I think that might be the way that we go. And now I have been getting some convincing arguments from Dave in the comments about, he's saying there's a high probability that there's going to be 2 sales going through next week also. So again, Dave Lee makes a great argument. I have other information telling me that he is going to continue selling, which is why, again, plan and be ready. I am ready for either one. So those of us who are out there who are in that situation, we're good for either way. If it goes green, awesome. I'd love to see it go green. I want it to go green. If it stays red for a little while longer, okay, great. I'm also prepared to be able to invest a little bit more money in the short term to be able to take care of this more of a dip. So this is kind of one of the things that I want to, encourage you guys to do, is get into that situation where your emotions can be out of it and you can be totally happy regardless of which way the stock goes, because we know long term it's going to be outstanding. So in the short term, we can be happy either way. If it's green, hey, my portfolio looks better. If it's red, hey, I can add more shares to my portfolio. So to have that versatility is one of the main reasons to be able to get yourself planned for the future, and it helps you take your emotions out. Let me know in the comments below what you guys utilize as ways to get through the times where it's red. Do you have good cash flow options coming in for yourself? Do you just decide, I'm going to diamond hand like crazy and get through this? Do you just turn off the stock market and say, you know what, I'm just going to wait till I hear news that it's going green again and go from there? Let me know what you guys do. It could be great to help teach everybody else different strategies that are out there that could work for everyone. There are a couple of the stocks that you guys had mentioned. I wanted to go over a bunch of the dividend ETFs today, so I will go over those stocks on tomorrow's episode. So thank you all so much for watching. You're all absolutely amazing and awesome, and you have all convinced me to go to Austin. So as soon as I find out information on that, I'm totally going down there, and we'll keep you guys posted on whatever news I find out about that. Hopefully I'll be allowed to go. Hopefully it's not limited to Austin residents only. So I will try to my best to get down there for that as long as I'm allowed. Otherwise, Thank you all so much for watching. If you have not subscribed, please do so down below, and we will see you later. Have a great one.